the pressure that Trump has added in the last month made a big difference. And it's put Canadian politicians on notice, which I love. If you don't play to your strengths, you'll never realize your full potential. When we have a leader who denies the Chancellor of Germany a natural gas deal and Japan, when they come offering distressed prices for a commodity that we have in abundance, and we say we can't make a business case for that, but if we don't play to our strengths, it doesn't matter.
The Canadian Prime Minister Justin Trudeau has just officially resigned this week. It doesn't mean that he's out of the office just yet. It means he won't be running for re-election. He'll still be in Parliament until the next election. We don't know exactly when that's going to be called yet, but this does bring effectively an end to a 9-year reign in Parliament. Jay Martin is here to discuss what's next for the Canadian government, as well as bilateral relations between U.S. and Canada. Ultimately, what's next for the Canadian economy, for the U.S. economy, and for investors. Jay Martin is the host of The Jay Martin Show and the host of the Vancouver Resource Investment Conference, one of the largest resource investment conferences in North America and the world. It's coming up later in January. Welcome back, Jay. Good to see you. Happy New Year.
David, it's great to see you, and I'm looking forward to seeing you at the VRIC in a couple weeks.
Yeah, it'd be great to host a few panels. People in Vancouver, come check it out. Great show. I love being there. I've been covering it many, many years now. And Jay Martin Show, check it out, link down below. You do a lot of great interviews. People should check out Jay Martin's interviews with a lot of key notable people in the space. Great show. So check that out. Jay, I want to play for you a clip of Trump's reaction to Trudeau's resignation, and then we can get into the details. I found this particularly amusing. Take a listen.
We'll impose new tariffs so that the products on our stores will once again be stamped with those beautiful words, made in the USA. And we are not treated well, as you know, by Canada. Canada is subsidized to the tune of about $200 billion a year, plus other things. They don't essentially have a military. They have a very small military. They rely on our military. It's all fine, but, they got to pay for that. It's very unfair. I have so many great friends. One of them is the great one. Wayne Gretzky. I said, run for Prime Minister. You'll win it'll take 2 seconds, but he said, well, am I going to run for Prime Minister or Governor? You tell me. I said, I don't know. Let's make it Governor. I like it better. But no, something's going to have to be done.
Oh, my God. Okay. All right. Trump is doubling down on this 51st state idea. I think it started off as a joke, and now he's doubling down on it. I don't know if it's a joke anymore. He's not talking about military annexation. Anyway, is Wayne Gretzky going to be the next governor of the state of Canada?
Right. I honestly, David, I love the pressure he's putting on Canadian politicians. It's not unrelated that Trudeau resigned this week. I mean, he was headed that direction anyways. That's clear. The Liberal Party was a sinking ship and he was going to jump off. I think that was very clear. But the pressure that Trump has added in the last month made a big difference. And it's put Canadian politicians on notice, which I love. I mean, it's rare that Canada makes international headlines. We usually don't. But we made international headlines maybe back in 2021 with the Freedom Convoy for some good reasons. And then on the heels of Trudeau's decision making, a lot of bad ones more recently. But here's the thing, when people say Trudeau resigned and then they celebrate, I think they're missing a really important point because they're taking for granted that this is the end of the Liberal Party's reign. And it's exactly the opposite. How they need to think about this is identical to after Trump debated Biden. And right after that debate, it was super clear that Biden stood no chance and the Democrats needed to replace him. So they did the hot swap. They pulled him out. They did the rebrand campaign on Harris and ran her. Now, it didn't work, but I think it's safe to say that Harris did provide more of a threat to Trump than Biden would have. And that's why they made that swap. And that's all that's occurring right now in Canadian politics. The Liberal Party has seen the writing on the wall. There's been pressure added behind the scenes. Trudeau has, quote unquote, voluntarily stepped down, but that's because they know they can't win with him. And so what's really happening is just a swap of the jockeys. There's a handful, there's at least 3 that I know of who have raised their hand. The front runner right now seems to be Mark Carney, and let's imagine that's what occurs, right? So now all that's occurred is that the Liberal Party gets an opportunity to put a new candidate forward. And conveniently, this new candidate stands for all the policies that Canadians like and is opposed to all of Trudeau's policies that Canadians dislike. They had that opportunity to start fresh. And I don't know if it's going to work, but it's a big threat to the Conservative Party. And in addition, because a guy like Mark Carney, if you're not familiar, he was the governor of the Bank of Canada. So he can come to the podium and say, look, I was the governor of the Bank of Canada in 2008. I'm the guy who steered us through the GFC. Now, that's not true. I think Canada got through the GFC with a healthier balance sheet than any other G7 nation, but that was because of what we did in 2005, 6, and 7, not what Carney did in 2008 when he arrived. 2008 to 2013 is when he was the governor. But people don't look at those details. They just hear the headline from the podium. Oh, he's the guy that steered us through rough waters in the past. We need him back, right? Oh, and so I think it's too early to celebrate. But I love the pressure that Trump is putting on Canadian politicians in general. It's not only hilarious, but it's actually causing change, which is wonderful.
Is this the change you want, though, to see?
Yeah, it is the change I want. I mean, look, here's Canada being a 51st state. No, I don't think that would be a horrible idea for Canada. It'd be great for America. Don't get me wrong. Americans should love that idea. Canada is a landmass bigger than the United States. We have the same amount of people as the state of California. It's enormous, and there's almost nobody here. But despite a very small population, we rank in the top 5 when it comes to producing oil, when it comes to producing gas, uranium, nickel, gold, zinc, diamonds. We punch way above our weight. We produce 25% of the world's potash. If you want to grow food, you need potash. 30% of the world's softwood lumber. You want to live in a house? You need lumber. Like, Canada is the export nation. We should be the wealthiest country in the world on a per capita basis. The issue is that our wealth is locked beneath the surface, and our federal policies have hamstrung those extraction industries.
We're not wealthy compared to Americans, and we're going to get to a bunch of Canadian stats in just a minute. But that's a very good point you brought up. We're going to get to Canada's economy and the U.S. economy in just a minute. But going back to the election, here are poly market odds. So next leader of the Canadian Liberal Party, like you alluded to, Mark Carney, is leading in poly market odds. These are just betting odds. Who knows what's going to happen? But keep in mind, poly market correctly predicted Trump. So maybe there's something here. Next Prime Minister of Canada, poly market again. Odds are in favor of Poilievre. What is your guess? If I put a gun to your head and say, hey, guess who's going to be the next PM? Take a pick.
Yeah, I'd take Poilievre. I'd take Poilievre all day. If it's a gamble like that, if I'm putting money on an outcome, that's the outcome I'm betting on. You
don't think Carney can turn it around? Because, Trudeau, keep in mind, suspended Parliament until March. So the Conservatives obviously won an election today. They would win today. But Trudeau is strategically prolonging this process. Mark Carney is not going to turn it around, or anybody else for that matter?
I think he might. That's it. If I had to today make a bet on one binary outcome, I would bet on Poilievre, given what we know today. But no, I think that we're underestimating the threat that somebody like Carney presents, because I think from a public perception standpoint, he presents a much bigger threat to Poilievre than Harris did to Trump. And for some of the reasons we discussed and more, and he's got more time to conduct the rebrand campaign. Canadians in general they're more liberal than Americans. We just are. And so having somebody who can get to the podium and claim they're going to be fiscally responsible and repair the damages done by their predecessor being Trudeau, Canadians might listen to that if it's communicated in the right way. I'm very worried about that outcome because I don't believe it at all. We need establishment change in a big way in this country. But I wouldn't discount Carney. That's all I'm saying. I'd bet on Poilievre, but let's not take it for granted.
Wayne Gretzky is not in these odds, so we'll see what.
If he was, that's where the money's going.
Canadians love the economy, but we love hockey more. This is some of the responses from opposition leaders today. I'll start with Jagmeet Singh, leader of the NDP. He said, Justin Trudeau has let you down over and over. He let you down on the cost of housing and groceries. We'll get to that, Jay. He let you down on fixing healthcare. It doesn't matter who leads the Liberals. They don't deserve another chance. He's also saying Conservatives don't deserve another chance either. Here is the Conservative leader, Poilievre's response. Speaking of Poilievre, take a listen. We'll respond together.
Good day. Canadians desperate to turn the page on this dark chapter in our history might be relieved today that Justin Trudeau is finally leaving. But what has really changed? Every Liberal MP in power today and every potential Liberal leadership contender fighting for the top job helped Justin Trudeau break the country over the last 9 years. All Liberal politicians actively worked to pass into law the job-killing inflationary carbon tax, a tax that Carbon Tax Carney endorsed in his book. All supported a law quadrupling the tax over the next 5 years. All voted for or actively supported Trudeau's out-of-control spending, debt, and immigration. All passed Trudeau's housing policies that doubled the cost of homes. All Liberal politicians helped pass catch-and-release bail and house arrest for the most rampant reoffenders. Policies that increased violent crime 50%, gun crime 116%, and hate crime by 250%. So given that Liberal MPs and leadership contenders unanimously supported everything Trudeau has done.
All right, I'll stop it here. People can watch the full clip on Poilievre's X account. He posted this today. Okay, he brought up a number of issues that we'll address today. Let's start with housing affordability. These are some scary stats I want to present to the audience here. Canadians are aware of this, but maybe some Americans are not. Canada has some of the most unaffordable housing markets anywhere in the world. Toronto has been ranked top 5 in the world for most expensive houses. If you take a look at my screen, I'll put this on the screen. National Bank has conducted research on this. In Vancouver, where I currently reside, and you live close to Vancouver yourself, Jay, it now costs the average homeowner, if you were to rent or buy a home, your monthly mortgage payments are now in excess of 100% of your monthly median income. Meaning if you were to buy a home, the average person's median income would not be enough to cover mortgage payments. Toronto is at 90%, Canada's average is above 60%, and then Calgary and Montreal below that. In Vancouver, it costs more than $260,000 to buy a home. That's the most expensive market in Canada. And polls have shown that 1 in 3 British Columbians want to leave the province because they simply can't afford to even live here. So what can be done to fix these issues, Jay?
Yeah, I think, well, that stat's really interesting when you compare the average income to the average mortgage payment. And if the mortgage payment is over 100% of the income, it just tells you that no one's buying homes. That's what that really means. The average income is not reflective of homeowners because they can't afford those homes. I don't know what the average age of new home buyers is now in Canada. But in the US, it's ticked up to 38 years old, which is way higher than the 10, 20, and 30-year average. It's continually climbed. The average home buyer age in the US is like 56. The average new home buyer is 38. So I would imagine it's very similar here in Canada. I would imagine it's not that different. Yeah, and I left Vancouver for that reason, right? Like I got 3 kids. I want square footage. I want space, and there's just no value. There's no logical transaction to be had, But when people think about the Canadian housing market, they think Vancouver, they think Toronto, right? Which is like I understand why. Those are the 2 major cities, and where the majority of the population resides. That Calgary, Montreal, and Ottawa. But Vancouver and Toronto are the housing market conversations, but Canada is full of small towns. There are lots of options if you're willing to leave the city. And I know so many people who are banging their head against the wall in downtown Vancouver because their income does not meet what they would need for the mortgage payment, exactly what you just said, but they just refuse to leave. And I honestly, to be honest with you, I think that I don't really have sympathy for that. It's kind of like, look, like it's a world-class, there's reasons that the housing market is overpriced, but also it's a world-class city, accessible to everybody globally as a residence or investment opportunity. It's got mountains and oceans surrounding it. It's civilly governed. It's clean. It's safe. Like it's universally attractive. And it's a small city that is surrounded more or less by water on 3 sides, like downtown Vancouver. It's sort of an island. So it can't expand. You have a finite supply of something and the world wants it. Of course, it's going to be overvalued. So that, there's some bureaucratic reasons why we're overtaxed on a handful of things, including real estate. But just from a simple supply and demand standpoint, honestly, I get it. I get it. I mean, what do you want? More regulation to keep out foreign capital? Like maybe that's the right move. And there is rationale for that. But also it's like there is just a supply and demand dynamic here in Vancouver and Toronto to a lesser degree.
What's the investment play here based on what you just said? Are we looking at suburban homes, more rural homes, if you're looking at a play there?
Yeah, I would look. I mean, so real estate's not my investment area of focus. I'm probably overly exposed to it just because southwestern British Columbian real estate's been crazy the last 15 years. And so despite my lack of expertise, I've done quite well in this market, but we don't own anything in the cities. My wife and I have a few properties and they're all in, the kind of like, well, where I live actually. So it's a town of 29,000 people, but it's 1 hour outside of Vancouver. So you're not in the city, but you're there as often as you want to be. It's a quick trip down the highway, but it's small town living, right? And so, these areas have been the boom towns in Canada for the last 5 years because the migration has been out of the urban centers, but close to them. And it's same in the U.S., right? You look at the boom towns in the U.S., it's often like the city centers, but then the suburbs or small towns 30 minutes to 90 minutes away from them.
Yeah. And you brought up a bigger question as to why Canadians aren't richer. Well, take a look at some of these stats here. Canada's GDP per capita compared to the OECD average below their peers. Wage growth in Canada has grown slower than wage growth in the U.S., which means real wages in Canada should be lower than in the U.S. in terms of growth. Household debt as a percentage of disposable income. I have a lot of American audience members complaining about the level of household debt in the U.S. That is a problem for sure. If you take a look at this graph, it's above 100%. But take a look at Canada, above 180%, just gone up in a straight line while the U.S. peaked sometime in the mid-2000s. So why is Canada's situation, and by the way, speaking of the budget deficit, right? The budget deficit is now, according to the National Post, 50% higher than what was initially projected in Chrysler Freeland's spring budget. So why is a Canadian fiscal and financial situation for the average Canadian so much worse than, relatively speaking, compared to even the U.S.? Why aren't we, tapping this vast wealth under the ground here?
Yeah, here's my honest opinion on that. Like we mentioned at the top of this interview, some of the industries that Canada excels in, and they are nearly 100% extraction and export industries. But if you don't play to your strengths, you'll never realize your full potential. When we have a leader who denies the Chancellor of Germany a natural gas deal and Japan, when they come offering distressed prices for a commodity that we have in abundance, and we say we can't make a business case for that, but we can supply you with hydrogen, which we don't have any, maybe 10 years down the road. Or we have a leadership who isn't willing to support the mining industry, but does want to subsidize electric vehicles. We're not known for electric vehicles in this country. We're very good at the natural resource sector, very good. But if we don't play to our strengths, it doesn't matter. So the way Canada's been governed for the last 10 years is the equivalent of the coach of the Chicago Bulls in 1996 walking into the locker room and saying, hey, look, guys, we got a lot of potential here, but we're going to try something different. You're now a soccer team. And they're like, we don't play, we're really good at basketball. No. Europeans love soccer. So you're going to play soccer now. That's what's occurred here, right? And so, why are we earning less? Why is there less opportunity? Why is the corporate investment per worker 50% of what it is in the US? So corporations invest about $28,000 per worker annually in the United States. It's $15,000 up in Canada. We're just not investing. And that, when you look at corporate investment on a per capita basis, that's just an indicator of future productivity. Because if I invest as a business owner in infrastructure services, I'm investing in potential future growth. If I'm not doing that, I'm just going to see less. There's going to be less future growth. And that means less opportunity for growth for all of my employees, less upside, less optionality. And quite frankly, if you're in my position, and your family is dual citizenship, and you look at the disproportionate living standards north and south of the border, you leave. That's what happens, right? And that is what is happening. And so I think it's very simple. You got to play to your strengths. You got to figure out what you're good at and go that direction. And that applies to everybody, whether you're in business, an athlete, an investor, or government. You got to recognize your advantages and play those. And we haven't been. And that's why we're struggling. We're trying to be something we're not.
Yeah, on the subject of investment, here's a stat. Canada has lost $225 billion in FDI since 2016. So according to the OECD, Canada was the third largest recipient of foreign direct investment inflows in the first 3 quarters of 2023, behind only the U.S. and Brazil. But does that mean Canada is doing well, attracting capital? As the federal government has argued, not really, not if you consider outflows. To net outflows, I think the article is arguing has been negative over the last decade. What needs to happen to attract capital back into the country? Is it lower taxes, better policy, all of the above?
Yeah, I think it's more respectful leadership. You want to invest in a business whose leader you have confidence in, and the same goes for countries. You look at the Trump impact already, and he's not in office. You look at how the perception of America has shifted globally. He's already making ripple impacts. And look, I mean, if we see a change, I think we both sounded quite pessimistic on the future of Canada for the last 20 minutes, and for factual reasons. But if we see a shift in establishment, that could all change, right? If you had invested in Argentina on the day Milei took office, that was a great bet. Argentina has a lot of potential. But look, this can go both ways. Actually, that's a great example, because if you go back to the beginning of the 20th century, Argentina was one of the wealthiest countries in the world. And the wealthy Argentinian was a phrase that most people knew because of how abundant that country was. And the economy was built off of heavy European immigration and an agricultural commodity export nation. They got hit very hard in the Great Depression, and instead of recovering like so many countries did, they went full populist, then socialist, and spent the next 90 years bouncing between socialist and military rule. And by 1989, inflation had skyrocketed to 3,000%. So that can happen too, to a country with great potential. I talked about what's available to us beneath the surface, but governed improperly, you can have a full century of dark times. Like Argentina had all the ingredients for abundance, and they realized that for a long time. And then poor governance cost them a century of productivity, and they are just now getting their feet back under them. And I think that Canada is in that place. We need to have an election. And if we vote the right direction, then we are Argentina the day Milei took office. But if we're not, if we don't see a shift in establishment, then maybe we're Argentina in the 1930s. I don't know. I know which one I want.
We're at the crossroads, either up from here, we're a century of dark times. That's the crossroads here.
I just think, I don't want to sound like a doom and gloomer, but yeah, it can happen, and it's happened in the past to countries that had all the right ingredients.
Well, take a look at the Canadian dollar. It's been depreciating for quite some time now. It's just been weakening versus the U.S. dollar, versus a basket of other currencies as well. A bit of a bounce, though, this week on the news that Trudeau has resigned. Not by much, but a bit of a bounce. Understandable, I guess. But what's your outlook on the CAD now?
Yeah, I don't love it. I'm not bullish on it. I think we'll probably, I'm not a currency specialist, but I'm not expecting us to bounce back, David. And I'm building my business around that thesis. Just so.
What if the Conservatives win? This is the Milei bet that we were talking about here.
Yeah, this is the Milei bet. I mean, I believe that Poilievre can turn the country around. I hope he can. I don't think it's something that's going to flip like a switch. I don't think that a turnaround would occur that quickly. And maybe it's just the sort of conservative demeanor in the way I run my company. But like I have an event production business, we have a lot of US dollar costs. And so I'm building that company right now in a very conservative manner, prepared for a 70-cent dollar for the foreseeable future. And I hope I'm wrong, because that will be lovely. But we're doubling down on our USD revenue models right now. And we're being very conservative with our Canadian revenue USD expense models. So.
Well, ultimately, then, investment implications for everything we discussed so far. We have a change of the guard in Canada, change of the guard in the U.S. Change of leadership seems to be the theme of 2025. How does that translate to the investment landscape?
Well, I think if we get that shift in administration in Canada and it goes to Poilievre, we have an Albertan back in the federal seat, and we have a great track record when we have Albertans running this country. That was Stephen Harper. He was the one who did lead us through the 2008 GFC with a healthier balance sheet than any other G7 nation because of how he leveraged our natural resource economy. And so he's very involved in the Poilievre party, more so than he's been since he left politics. This is Stephen Harper. And so with a government that appreciates our natural advantages and supports the extraction industries, doesn't create an environment where you have provinces like Alberta putting together the Alberta Sovereignty Act and the Saskatchewan First Act, which essentially is legislation that's the province is trying to fight to get their constitutional rights back. They're fighting back against federal creep into their decision-making, meaning they've got product, they're trying to get it to market, but they're being blocked by the federal government. And, we need a deal maker in the federal seat. That's it. We need somebody who understands that their job is to clear bureaucracy out of the way so that the provinces can conduct business the way they see fit, not the opposite. We've had a very power-centric federal government for the last 10 years. And, hopefully what we'll get here is somebody who understands their job is to clear the path. That's it. And then let the provinces operate with their own sovereignty and get deals done. And if we move that direction, I think that, as mentioned, if you need it from a raw material standpoint, Canada can probably supply it. We're the only, I mentioned several commodities already. We support 5% of the world's cobalt production. We're nearly the only non-Chinese cobalt provider. But the list goes on. And this is in an environment where natural resource extraction has not been supported. So we have a lot of potential with the right governance.
What happens to the U.S. economy? Let's talk about U.S. economy now in relation to Canada. So here's Doug Ford earlier in December saying that he will cut off Ontario's energy supply to the U.S. if Trump follows through on the 25% tariffs across the border, whatever the number happens to be now. Premier Doug Ford said Ontario could cut off energy exports to the U.S. Ford told reporters at a conference that the finance minister at the time, Chrystia Freeland, will put together a list of items upon which Canada could impose retaliatory tariffs, and so will the Ontario government. Obviously, that's no longer in play. Chrystia Freeland is no longer deputy PM and finance minister, but Doug Ford is still the governor or the premier of Ontario. So, that could devastate not just the eastern seaboard for the U.S., but also completely kill U.S. Canadian bilateral relations. I just wonder what the next move is. What do you think?
Well, that's what I wondered. Has he thought about what the next move is? Like, what's his plan here? What does he think the outcome will be if he withholds energy from the United States? Like, what's the long-term plan with that agenda? It's not positive because, yeah, we'll disrupt energy supply to the eastern seaboard in the short term, but we will blow up Canada and U.S. relations in the long term. Now, which has a bigger consequence? The U.S. will find a new supplier. They absolutely will, right? And then where are we left? Without a buyer for a product that we need to get to market. It's a silly proposition. And I think it was thoughtless and reactionary. I'd love to hear his rationale for the long-term plan and what he expects to gain from a scenario like that. If he thinks he's playing hardball, I'll play hardball, like it's fine, but it's just silly. Nobody believes him. I don't think so.
Okay. Well, what do you think is going to happen to inflation if tariffs hit? Are Canadians and Americans alike going to be impacted by tariffs or not so much?
Well, it's tough to see inflation coming down in the U.S. I understand why Trump ran on the inflation crusher mandate. That's what everybody wants to hear. I'm going to get prices down. I'm going to fix inflation. And maybe he can do that. There's a couple reasons you could see progress, but more importantly, I look at tariffs. Those costs are passed on to the consumer inevitably. Tariffs are inflationary. He's going to deport a large percent of the labor force, maybe for the right reasons, but you reduce the available cheap labor, that's inflationary. He's going to make America great again by reshoring industries, probably the right idea, but you're reducing cheap labor and replacing it with expensive American labor, that's inflationary. All of his policies are inflationary. And so you can come to the podium and say, I'm going to beat inflation. I just don't know how you're going to do it. Now, I think his strategy is probably the sort of drill, baby, drill campaign, and let's flood the U.S. with cheap energy again and get energy costs down. The question is, does the geology support the policy? Because if you look at the majority of the gas basins in the U.S., the Marcellus seems to have peaked in 2012. The Eagle Ford peaked in 2012. The Bakken peaked in 2012, 2013. The last strong basin standing is the Permian. And most energy analysts that I talk to believe that peaked last year. It's not empty. It's far from empty, but we've hit peak extraction from those basins. So, will he be able to flood the country with cheap energy is a question mark. Maybe, but we don't know. And the second would be some kind of a productivity boom. And I guess on the heels of, large scale enterprise AI adoption that really does drop the cost of goods and services, but it's quite speculative. And I don't think that's going to make the dent. Otherwise, I don't see how you do it. The US has, 35 trillion in debt, but they have 100 trillion in off balance sheet liabilities. Those are liabilities in the future, promises to pay, commitments that are coming down the pipeline that they don't know how they're going to pay for yet. So, what's the strategy there other than money expansion? I don't know. That's inflationary, right? So, is there another path? I don't personally see it.
You're an investor yourself. What are you doing with your money these days? Some people I've talked to, privately have told me that now's the time to go into money market funds. Inflation's coming down, interest rates are still high. Lock that in. What's your play? Do you agree?
Yeah, so I have a pretty specific portfolio approach, David. It's the barbell approach. Many of your viewers are probably familiar with this, but there's two very opposite ends of the spectrum, the risk spectrum. One is hyper conservative and one is hyper speculative. And I really put almost nothing in the middle. So I don't have any cash in the broad equity market. I like to play where I have a competitive advantage. I mean, that's kind of been the theme of this conversation to a degree. And so I don't have a competitive advantage trying to play NVIDIA or Tesla. I can't do that. I'd just be another guy in the room. So what I do is I focus on preserving purchasing power first and foremost. That comes from a place of having 3 young kids and I got to protect their livelihood. And so on the conservative side of my barbell, yes, there's a lot of real estate, there's a lot of gold and cash equivalents, right? And then the speculative side is where I look for upside. And because of where I sit in this world, I'm pretty heavy in the junior mining sector. It's not for everybody. It's very risky. It's a tough game to play. But I have a competitive advantage there because I spend every day of my life in that industry, talking to CEOs, other investors, stress testing my theses, and forming good ideas, and then interviewing CEOs to allocate cash. And so that's it. And, I look for the asymmetric bets on the speculative side. When I'm so lucky to generate profits, I pull them over to the stable side of the barbell and I park that, right? And that just sits and assets that retain purchasing power and maybe generate a bit of yield like the real estate.
Commodities is something that you are exposed to probably more than the average investor. You work with a lot of resource companies. You work with a lot of, guests on your own show who pontificate on the future of commodities. What do you think is going to happen to commodities this year in 2025? Copper, for example, had a pretty rough year. It's still up on the year about 9%, but it peaked around, I think, April or May, and it's come down ever since. Base metals, gold, silver, platinum, the whole works. Your outlook and what do you prefer in 2025?
Yeah, I think copper is the best example to use because the supply and demand picture for copper is replicated in most industrial and precious metals. And that's real simple. When people talk about the copper forecast, you often hear them talk about, the coming AI demand that'll come from the infrastructure we need to support artificial intelligence, or it'll come from further EV adoption and the additional copper required to build out those vehicles, or it'll come from renewable energy and these maybe, and this will cause a massive boom. I mean, the forecasts generally land around demand increasing or sort of doubling in the next 10 years from 24 million metric tons today up to 50 million metric tons by 2035. I don't buy any of that, by the way. I'm still bullish on copper, but I'll talk about why I don't buy any of that. The other side of that argument is that, yes, there's some reasons to be bullish, but we're probably heading towards some kind of a globally coordinated recession. And in that event, demand's going to get crushed. And we're not going to need any copper, so we'll be oversupplied. I think that's a possibility from a recession standpoint, but I don't buy the demand destruction thesis either. And here's why. We can't predict the future. We can try for fun, but we shouldn't put too much weight on that. What we can do is look at the last 50 years of copper supply and demand dynamics and then make some assumptions. And what we'll see is that our copper demand increased on a very consistent and steady trajectory decade over decade, about 4 to 6 million metric tons. Going back to 1970, we were consuming 3 to 4 million metric tons. 1980, it was 6 to 8. 1990, the same. 2000, we would go up by about 4 to 5 million metric tons on average every decade. Now, why that's important is because in the last 50 years, we saw everything that we might see in the next 50, right? We saw massive technological innovation. We saw the dawn of the internet, the personal computer, smart technology, smartphones, like that all arrived, right? Yeah, what happened to did it come off and just go parabolic and increase by 100% in 10 years? Like, no, it didn't. The same very steady, consistent trajectory maintained despite all that innovation. And the same thing on the recession front, 1987, dot-com bust, 2008 GFC. We saw globally coordinated recessions, yet that trajectory maintained on average decade over decade. So that should give you assurance that should give you the most assurance out of all the data you could pull in. I like history the best. So I don't care if we see an AI boom or EV boom or globally coordinated recession. I can say, look, I think past is prologue. What happened in the past is likely to continue because we saw all that stuff that might happen in the past. But what is important to note about that trajectory is we've only talked about the demand, right? It's increased by 4 to 6 million metric tons per decade. But production met that demand right on par. In 1970, we consumed 3 to 4 million metric tons. That's what we produced. Same thing in 1980, 1990, 2000, up into 2010. Production was right in step with demand. And then around 2012, production began to flatline and demand continued on that consistent trajectory. 2015, the gap widened. 2020, it widened right up. Production has stayed at that 19, 20 million metric tons that we hit in 2010. It hasn't moved. It has not kept pace with our growing demand. And that's simply because we stopped investing in new mines. And you have to do that if you want more copper. So we stopped investing in the supply, but the demand kept growing. That's why this supply and demand gap has opened up and will increase as we go forward. That's not a short-term play. Like copper's down this year because when it comes to commodities, like there's two players involved. There's the long-term value investors like myself, and then there's short-term traders. And I'm betting on the long trend. I'm looking at a 50-year trend and I'm making a bet on the next 5 years, right? But then you have traders who come in and overbuy and oversell and overbuy and oversell, and they create this short-term volatility along the way that shakes people out. But you need to step back and say, like, was my thesis ever a 6-month thesis? Like, it wasn't. So, okay, it doesn't matter, right? I'm looking at the 5-year outlook. And if you know your time horizon, you shouldn't be shaken out by short-term volatility, but you got to know your time horizon first. Commodities, it's easier to do that because we have decades of supply and demand data to look at.
A lot of gold miners are going to your show. How many miners are featured at VRIC, by the way, this year?
256, I believe, this year. Yeah.
Okay, well, in 2024, I'm going to say all, but a lot of miners did not outperform the underlying commodity. I'm talking about gold and silver to some extent, right? And they started to catch up post quarter three, I would say. Is 2025 the year of outperformance for these equities? We don't know. We're just speculating here, but provide us a reason as to why it may or may not.
Yeah. So here's my reason. First of all, I have no idea. I can't time markets and don't try. If 2025 is the year, I'm going to make a lot of money. It's going to be great. But here's my thought process on that. Commodity markets, mining markets, tech markets, AI markets, crypto markets, it doesn't matter. Human nature and investor behavior is always the same. There's generally one pillar company idea or concept that takes off and leads the way. Call that physical gold, call that Bitcoin, call that the big cap, whatever it is. And investors watch that rise. They all chase that share price for a period of time, and then they begin looking for the what's next opportunity. That's why when Bitcoin runs, then you see all these altcoins scurry up after it as investors look for the what's next opportunity. You saw this, you're seeing this right now in the AI play. You see it in every emerging idea when it comes to investment. And the mining sector is just the same, right? So we've seen gold take off, hit all-time highs eventually, and the producers are now getting bought and they're catching up to the what's next opportunity. And eventually investors will look further down the food chain to find the next undervalued thing that will probably get pulled up with the main pillar idea. I mean, that's how every investment cycle works. Timing that is very hard to do. I don't try. But I have confidence that human nature hasn't changed and investor behavior in relation to human nature hasn't changed either. And so that's my bet on that, David, is that I'm bullish on commodity prices this decade. I think we're in a secular bull run for commodity prices. not just because of the supply deficits from lack of investment and capital starvation over the last 15 years, but also, we are shattering the geopolitical chessboard right now. I mean, we talked about the Canada-U.S.
Sure.
friction, and Canada's threatening to cut off energy from the U.S. These are the two closest trading partners in the world. So what's happening on a global scale is relationships are breaking just like that, left, right, and center, and the supply of goods to the buyer of those goods is no longer as certain as it's been my entire life. New adversaries are being made, new alliances are being formed. All of that affects global trade of raw materials. And when the supply of raw material is uncertain, people will pay more for it because that scarcity encourages demand and increases price. So, that's my base case for commodities. When do the equities start to run in tandem? I don't know, but I have confidence that this cycle will be like every other one.
But are you more bullish on the commodities than the equities?
No, I mean, not from a capital gain standpoint. I'm not. Typically, you look to the equities for the leverage, right? And so I own physical gold for very different reasons than I own gold miners, right? I own physical gold that I hope to leave with my kids. I mean, that's the game plan with that asset class, right? It's the preservation of purchasing power. I don't check the price. I don't care. I'll buy more if it goes down, I suppose.
Well,
but other than
that's the thing. So, I mean, gold did very well in 2024. I don't remember the exact percentage again. I think it was like 30% up 2024. And, the miners, the GDX is up a little bit more than that on the year. And the question, to your point about speculative assets being pulled away to other sectors, right? I just wonder if that's going to happen this year, which would ultimately mean a bearish thesis for equities relative to the commodities.
Speculative assets being pulled away to other industries. What do you mean?
For example, you mentioned altcoins, right? So some people have told me that one of the reasons for why the equities markets and the resource sector that we've been talking about have not performed as well as you might expect, given the leveraged nature of these stocks relative to commodities in 2024, is because capital flowed into the crypto sector. They flowed into tech stocks, for example, the Mag 7, even the Russell started to do very well. So it's just a lot of choices for people to speculate on. The traditional speculative crowd in the resource sector, are they still going to stay here for 2025? Is there a reason for them to stay here in 2025? That's what I'm getting at here. Yeah,
okay, that's a great question. And, again, I don't know, but here's some of the indicators that I pay attention to. So I host an annual mining investment conference, the VRIC. Last year at the 2024 event, 30% of our attendance was there for the first time ever. And that would not surprise me if 2023 had been a blockbuster year for mining equities, but it wasn't. It was the opposite. It was a very tough year for investors in mining equities. So why, in a bear market, did my audience increase by 30%? And the answer is, I think, because more and more people are experiencing a higher cost of living. They're experiencing a lower trust in politicians and establishment bodies. And they're starting to pick their head up and ask questions. Simply put, what is going on, right? What is going on? And a percent of those people end up learning about monetary policy and how currency gets inflated away and why their purchasing power isn't what it used to be, and therefore how they can protect that. And they start consuming more macro and geopolitical and commodity-centric stuff. So for the first time in 15 years, I am seeing a flood of young investors show up at my event. Now, I've been to mining investment conferences all over the world for the last 15 years. 10 years ago, I was always the youngest person there. Like, nobody my age was showing up. Nobody 10 years younger than me was showing up. It was like an entire lost generation, 20-year gap where the attendance at mining investment conferences was only getting older and nobody new was showing up. And that shifted about 3 years ago and then really took off in the last 2 years and 1 year. And so, there's more competition for investor attention for sure. But look, it's up to the companies that operate in this industry to be competent stewards of investor capital and showcase their management competency. I mean, that's what it comes down to. It's a high risk industry. So, I don't think people should often I hear company CEOs claim, mining CEOs complain that, there's, Bitcoin stealing our market share. And kind of like, well, that's just a competitor. Like, what are you complaining about? You're competing for capital. Well, compete harder, right? Run a tighter ship. How's your G&A? It looks pretty egregious to me. Maybe tighten that up, right? You got to make a valuable proposition and bring that to the market if you want to collect the capital. It should be competitive. I think that's healthy that there's more distraction. It keeps people honest and keeps people working hard.
Okay, excellent. Now that leads to the final segment. VRIC, tell us about VRIC. How many people, you said last year was a great year for attendance despite a bear market. How many people are we expecting this year?
Yeah, I think we'll see around 8,000 people at the VRIC this year. It's January 19th and 20th at the Vancouver Convention Center. And so when an investor walks into the VRIC, they walk into a marketplace of 250 mining companies in a trade show who are there to tell their story and promote their story. And around the perimeter of the trade show, I have 5 stages. So we have 1 major speaker hall and 4 workshops, and we stream content all day for 2 days straight. I've invited over 80 keynote speakers from all over the world. So if you want to figure out, how to make sense of the world in 2025, it's a great place to go because I break the content down into 3 buckets. So we have geopolitics right at the top, where we're talking about the variety of global conflicts and trade wars that are occurring right now. And individuals like Colonel Douglas McGregor, Dr. Pippa Malmgren coming to speak about that, Dr. Pascal Lota from Neutrality Studies, brilliant individuals who are very good at pulling apart these complex conflicts and getting to the incentives of the stakeholders. What are the incentives of all the countries on the ground in Syria? What are the incentives of the countries in Ukraine and all of this that are fighting on the ground in Ukraine? From geopolitics, then we get into macro, and for my macro viewers, you'll find individuals like David Rosenberg, Danielle DiMartino Booth, Robert Kiyosaki, Grant Williams, and they're going to make sense of the monetary landscape and the economic outlook. So we start at geopolitics, then we get into macro, and then we get right into capital allocation as the 3rd bucket. So where is the smart money being invested in 2025? And that's where you'll hear from individuals like Frank Giustra, Ross Beatty, Rick Rule, and dozens more in all 3 of those buckets.
Yeah, you always have a great roster. Shameless plug. I see I'm looking at the schedule right now. I'm supposed to host a panel with Kiyosaki. I'm excited about that. Big fan of Kiyosaki. I've had him on the show several times. Author of Rich Dad, Poor Dad. So if you want to come watch the show, great lineup. If you want to go watch the show, check out the VRIC website down below. If you're in Vancouver and you want to see me host some panels, including the one with Kiyosaki, come check me out. And come check out Jay. I think you're hosting a bunch of stuff on the main stage as well, right, Jay?
That's right, man. Yeah. It'll be a ton of fun. I'll be on stage for 2 days straight. Stoked you're coming out, David, to host some content with me. That's going to be a blast. I've got you in the main hall squaring off with Rich Dad, Poor Dad, who's always fun.
It's going to be a lot of fun, yeah.
It'll be fun.
Yeah, it's a great show. Big honor to be a part of it. Thank you, Jay, for inviting me. And yeah, check out the link down below, VRIC, coming up in just a few weeks, January 19th and January 20th, I believe. And we'll see you there, Jay. Where else can we follow you, Jay? I mentioned your show. Where else can we go?
Yeah, we've got 2 YouTube channels. One is the Jay Martin Show. The other is VRIC Media. Jay Martin Show is more geopolitics. VRIC Media is a channel built by mining investors for mining investors. That's all we talk about. And on social media, I'm at Jay Martin BC, like Bravo Charlie, any of the platforms.
Put the link down below as well. Check out Jay's stuff. Thank you for being back on the show, Jay. Great chat. We'll see you soon at the VRIC.
Appreciate it, David. Thanks, buddy.
Thank you for watching. Don't forget to like and subscribe.